I now hand the conference over to Mr. S. Ramesh from Nirmal Bang Equities Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. On behalf of Nirmal Bang Institutional Equities, it gives me great pleasure to invite you all to the first quarter FY22 conference call of Coromandel International Limited. We have with us Mr. Samir Goel, Managing Director, and Ms. Jayashree Satapovan, Executive Vice President, Chief Financial Officer, to take us through the highlights of the results and then take the Q&A. Here's wishing all of you the best of health and stay safe. Let me hand over the proceedings to Mr. Samir Goel. Samir, all yours.
Yeah. Good afternoon, everyone. Ramesh, am I audible?
Yeah, you're audible.
Okay. Good afternoon, everyone. I hope, like Ramesh is saying, everyone is keeping safe and healthy. Thanks, Ramesh, for organizing the conference call. I'll give the overview of the business environment experienced during the quarter, followed by company performance and also the Q&A. The GDP contraction last year was 7.3%. Indian economy is expected to recover in FY 2022, boosted by increased public investment, vaccine rollout, and surge in domestic demand. Various rating agencies have indicated a sequential 9 to 10% GDP growth for the year for India during the year. I think in spite of the tough operating environment, agriculture sector remains to be a bright spot, and its GVA grew by 3.6% during the past year. Overall, India registered healthy growth, record food grains growth, 305 million tons, which was over another bumper year last year, and also the horticulture output was 330 million tons, again over a bumper harvest last year. In FY 2022, the global food price indices continues to remain firm, driven by strong demand for cereals and vegetable oil, fall in inventory levels, and there are rumors of some stock piling up by China. In India, thanks to record food grain procurement, wheat was 43.3 million tons, which is an increase of 11% over last year by the government agency. The cereal prices have remained stable. During the quarter, Indian agriculture export rose by 40% to USD 8.9 billion, and they're broken into the top 10 countries for agriculture exports. The southwest monsoon, as you know, was erratic, but now has recovered well, and in the last 2-3 years has covered the entire nation and reduced the deficit to 1% of the long period average as of 26th of July. As you know, the IMD in the June forecast had predicted this to be better than the long-term average. Our key markets actually have received very good rainfall. Telangana is over 74%, Andhra Pradesh 47%, Karnataka 23%, and Maharashtra late, like you have read in the papers, are caught up at 33%. And the reservoir levels, particularly in South and West India, remains well above the normal long-term period average. The crop sowing, however, is currently down at 9%, but will catch up fast as the monsoons keep spreading. And especially this will be good in our addressable market. Now coming to the overall performance, firstly fertilizer industry for the quarter. DAP and complex industry primary sales was down by 14%. This year 43.7 lakh metric tons versus 50.6 lakh metric tons previous year. Industry point of sale was also down by 13% over last year, 39.6 lakh metric tons vis-a-vis 45.5 lakh metric tons previous year same quarter. Industry complex sales grew the quarter, and it is at 25.1 lakh metric tons versus 24.4 lakh metric tons over the previous year, increasing by 3% year on year. Major raw material prices continue to get firmed up. The main reason is all the 4 big agriculture markets have done well last year with record production, whether it was Brazil, US, China, and India. Phosphate prices for July to September quarter 2 FY22 continue to increase and got finalized at $1,160 per metric ton compared to quarter one prices of $998 per metric ton. With the increase in phosphate prices, the government had increased the subsidy on phosphorus under the NBS scheme effective 20th May 2021. With the subsidy increase, companies are holding the MRP of DAP to ensure lower fertilizer prices for the farmers. Due to the increased demand and also due to certain supply issues with the major suppliers like annual turnaround of the plant or plant maintenance, there has been a constraint on raw materials such as ammonia, sulfur, and also the price increases have been seen in MOP and sulfuric acid. Coming now to Coromandel performance, like you have all seen, Coromandel had a strong all-round year performance in the quarter FY 2021, driven by turnover growth from crop protection business and sustained performance from nutrient and allied business. The company continues to work on its operational efficiency, cost initiatives, superior product mix, and new generation products for sustainable long-term performance. The performance was further supported by external factors good monsoons in company's key market and also good reservoir levels. One issue also was that last year, same period, because of COVID-1, the government had put certain restriction in terms of production and especially in terms of manpower. While this year it was to continue the business, it was sustained. So coming to the sector-wise performance, the nutrition and allied business had a good quarter. Nutrition segment revenue grew by 9%. Performance of the segment was helped by smart sourcing, economies of backward integration, cost efficiency during the quarter. New product launches by the fertilizer business, especially our move from grade to brand like Grow Shakti, Grow Smart, Grow Plus are doing well in the market and helping the farmers to improve their productivity. We are also promoting balanced nutrition and especially our specialized grades as compared to generic grades like DAP. On the sales front, DAP and complex volumes were at 7.8 lakh tons, which are lower than 6% over the prior period. However, manufactured DAP and complexes remain at the same level as last year. Imported product volumes was down by 84%. There were some constraints in the right pricing and availability of fertilizer in the international markets. The company market share in quarter one moved up to 18.1% versus 16.4% for quarter one last year. SSP quarter one was 1.86 lakh metric tons, which was a growth of 44% over last year. Market share improved to 14% from 10% last year. Last year, as you are also aware, that we had some constraints in operating our SSP plants, which wasn't the case this year. On the manufacturing front, our DAP and complex fertilizer plants operated at 73% capacity. Part of the reason was the annual turnaround was completed at Vizag and Ennore during the first fortnight of the quarter. Also, we had certain raw material constraints, mainly from one of our main suppliers because they had a fire at the plant, but things have been restored by now. The debottling and operating efficiency for phosphate production has reached a new high during the quarter. Capital projects initiated during last year has progressed well during the quarter. The 10th evaporator, which is basically to convert the low acid to high acid, the liquid fertilizer plant and other infrastructure projects are near completion and shall be ready for Q2 for operation. The business has started work on increasing granular capacity at our two SSP plants also. On the crop protection side, the crop protection registered a very impressive growth of 49% in revenue in the quarter, supported by strong performance by export and B2B market. Last year, as we had mentioned, there was issue in operating our plants due to the COVID restriction imposed by the government. Crop protection continues to work on new product development and has launched 6 new generation molecules across the categories during the quarter for the ongoing Kharif season. products include 4 insecticides, 1 each of fungicide and herbicide. The new product launches by the company will help enrich its portfolio. The strategy of introducing new generation products is helping in our Farmer Connect initiatives and improving farm productivity. The business has built a rich product pipeline backed by strong R&D capabilities and is participating in global innovators to further strengthen its product offering. On the manufacturing side, PPC plants operated with increased capacity utilization of 79%, vis-a-vis last year of 45%. Coromandel continues to promote green solutions through its organic fertilizer and biopesticide business. During the quarter, the company expanded its neem-based agar extraction capacity by 50%. Company is developing captive neem plantations for over 700 acres, mainly to look at sourceability. Further, company is also promoting resource efficiency use through mechanization, water-soluble fertilizer, and working on novel solutions like liquid fertilizers, applications like clean injections, etc. Continuing its sustainability journey, the company has released its first sustainability report as per the GRI core standards. The company continues to be serving the farming community during the lockdown through the extensive retail network. Even our dealers did very well to keep their shops open. The retail stores are functioning with all precautions amid COVID wave 2. The stores strictly follow safety protocols and continue to support the farming community by offering agriculture solutions including product, farm advisory and mechanization service. Business has improved its operational efficiency and has leveraged technology to reach out to the farming community. As you are aware, during the quarter, with the surge of COVID second wave, the company gave utmost importance towards ensuring safety of people and running of its plants safely. All major plants operation were with adequate safety measures and ensure continuity availability of products to the market. With the focus of normal monsoons for third consecutive year and good reservoir levels in the company's key markets, we expect good traction on the ongoing Kharif season. Coromandel, with its varied product offering focus on cost efficiency and innovation, will continue to work towards improving farm productivity and prosperity of the farmer. Now I'll hand it over to Jayashree for talking through the company financials, which can be followed by Q&A.
Thank you, Samir, and I will now provide updates on the company financials. Turnover for the first quarter, company recorded a consolidated total income of rupees 3,686 crores during the first quarter, vis-a-vis rupees 3,224 crores during the first quarter of last year. Nutrients and allied businesses contributed to 83% share, and the remaining 17% came from crop protection business. In terms of subsidy and non-subsidy share, it stands at 76% and 24% respectively during the quarter. Previous year, it was 80% and 20%. As regards profitability, the EBITDA for the quarter was at rupees 486 crores as against rupees 415 crores of the last year. In terms of subsidy non-subsidy share, it stands at 74% and 26% respectively during this quarter. Previous year, first quarter, it was 79% and 21% respectively. Net profit after tax for the quarter was rupees 338 crores in comparison to rupees 251 crores for the corresponding quarter last year. We had a subsidy outstanding of rupees 1,149 crores as on 30th June 2021, vis-a-vis rupees 2,585 crores during the previous year. Subsidy outstanding includes rupees 360 crores, which is being claimed and pending with the government for payment. During the quarter, subsidy received from the government was rupees 493 crores. Comparative figure last year was rupees 513 crores. Good business performance, working capital management resulted in overall positive cash balance with the company. We had an interest income of rupees 11 crores vis-a-vis an interest cost of rupees 23 crore last year. The balance sheet continues to remain strong. Company continued to maintain deposits which are earmarked for specific growth-related investments. CRISIL Limited has reaffirmed rating of the company and revised the outlook from stable to positive. On the forex front, during the first quarter, rupee was trading in a very broad range between 72.25 to 75.33. Coromandel has been following the board-approved hedging strategy and remained conservative, dynamically covering its exposure and managing the portfolio well. In terms of the overall financial performance, the company started the year with a strong note with a good performance in quarter one. We thank you for your interest in Coromandel and for joining us in this call today. We will now open the session for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1 now. The first question is from the line of Dinesh Bhargav from Max Insurance. Please go ahead.
Congratulations, Samir, for fantastic despite all the COVID crisis. My question is very simple. How do you look at, especially after May 20th, government capping the phosphate price and the raw material moving from 800 to 1000 to what you said 1160 now? So what do you see your outlook for the current year? And how will the company be able to protect, especially in DAP? That's question one. And how do you see the raw material outlook constraints farming out over the next 2 quarters? Thank you.
Yeah, thanks for that. So good question. Just on this front, firstly, we are not a DAP player. We are basically into balanced nutrition as such. We do some manufacturing and exporting of DAP or import DAP. So basically, it is a balanced nutrition strategy which is there. Coming now to in terms of taking what you called about the phosphate crisis. The good thing is that we have done backward integration at a Vizag plant, and we have had very good output both from both the plants this year. And also what we are doing is we also dispatching acid from Vizag to Kakinada plant. So and that is something which will increase with the 10th evaporator coming in. So partly that's how we are managing any of the price increases or the cost increases which are there. And our strategy continues to be to promote balanced nutritional and our specialized grades which are well accepted with the farmers as compared to generic grades like DAP. And the government is also quite happy on how we are able to push balanced nutrition. At the same time, in some of the markets, our single super phosphate is doing very well. This used to be a very good fertilizer. It's much more better when you compare it with DAP because obviously it has other nutritional inputs and also helps the soil. So our teams of agronomists continue to promote that. Long-term outlet, we had asked just to come to your second outlet. I think one of the good things about on the positive side on COVID was that agriculture, which was regarded as a sunset industry, has changed. A lot of investments have come into the rural area, and this is across the world, but also by our own government, and it's on not only helping to feed the nation in this COVID crisis, but also sustaining the economy. So all the, like you've seen, all the even FMCG players who are more rural focused have done better than others which are more urban focused. And our game plan would be to continue to build on our AgTech, our specialized products, and our engagement with the farmers for their productivity and prosperity. And therefore, we continue to see to this to be doing very well. Good news is that, like I mentioned, even exports, India is the exporter of agri products. Again, value-added products need to come in. But again, that's a very positive sign for the Indian agriculture. Thank you.
Thank you.
Thank you. The next question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, and Samir and Jayashree, congratulations on the great set of numbers. My first question is on the margins. So if I were to see there is some improvement in the product mix on a YOY, but still, given the RM cost pressure, you have done a very fantastic job on the nutrient segment margins. So just wanted to check how much incremental, if you were to just split, if you were to just call out some qualitative number, was the majority of the offset of RM pressure was done through cost-related initiatives and backward integration-related initiatives. So that's the first question. Or there was a significant element of the product mix as well.
Okay. Yeah, just go ahead.
Hi, Varshit.
Hi, ma'am.
Yeah. As regards the clarification on margins, there are 3 or 4 factors one needs to look into, right? One is obviously our sourcing strategy in terms of looking into multiple sources for importing our raw materials. The second one is the flexibility of our plants to process multiple rocks, multiple acids. That gives us a lot of operational. The third factor is running the plant at high capacity levels, especially with PAP1 and PAP2 for the phosphoric acid production. This quarter, we have run the plant at high efficiency levels. The capacity utilization has been good. There was also some benefit, lastly, in terms of the opening inventory coming in because that carryover has been there, but it is quite a modest one. So these 4 factors have actually helped on the cost front in terms of managing the margins. Secondly, we will also look into on the market front. On the market side, our agronomists continue to do a very good job in terms of advocating the right products which are required for the soil as well as the crop. So the agronomists play in the sales and market is becoming more and more evident. Secondly, on the market side, we have also launched new products or new brands. We have spoken in the past about transforming from grades to brands. So there are 3 or 4 brands that are actually having a good pull in the market. For instance, the Grow Plus, which is in the SSP, Grow Smart, Grow Shakti, which was launched in the last quarter, Paramphos. I'm just giving you a few examples. So there is a demand pull for the brand, which is also helping in terms of looking into a better realization. So a combination of all of these, plus with COVID, we have gone ahead on the digital marketing. So there is also the spend that has shifted from physical to digital. Therefore, there is some savings that's coming out of it. All of this is sort of being worked into to ensure that margins have been stable. I hope this sort of clarifies.
Yeah, it really helps. And my second question is on the subsidy front. So we see continued increase in the raw material prices. So now we have already seen one increase from the government on the subsidy front. So as an industry, what is the possible scenario going into Q2 or Q3? Will the government further hike the subsidy, or probably now the incremental pressure will be passed on in the form of higher MRPs?
Again, another good question. The government had increased the subsidy for tea. This happened on 19th May 2020, as all of us know. The subsidy for N, K and S, where we have seen some increase in raw material prices, however, has not been effective. So we are working with the government to see, in order to promote balanced nutrition, how the subsidies can be evenly distributed between N, P, K and S. So that's one part of the whole equation. The second thing is, as the raw material prices go up, there would also be some flexibility in terms of pricing in the market if the government is going to hold on to the current subsidy levels. This is something which the industry is also considering. So these two aspects should sort of help address the raw material prices increase that's happening currently. We also believe probably after the Kharif season, we should see some softening in the raw material prices. For instance, ammonia, we had both the large suppliers into India getting on to ATA, and one of the main suppliers also had a fire in their plant. Their facilities just started operations, and therefore we think that these prices should eventually soften. Similarly, there are trends which are coming across other raw materials. While this increase has been quite steep, over the next couple of quarters, we expect a gradual comeback on the raw material prices.
Sure. If I could just squeeze in one last. So if I were to see there's very impressive improvement in the market share, and whenever we have a scenario where the RM cost pressures actually increase, and given that our relatively better ability to manage on the cost front, this helps us actually to improve market shares faster. So while I understand that when things on the raw material, let's say, cools off, there will be some normalization in market share, but net you will be having a much higher market share than probably, let's say, a year ago. Is that assessment correct? And that's it from my side.
Market share is primarily depends on the volumes that are being supplied to the market, right? So overall, currently, we see that the inventory level, the channel, is much lower compared to last year. That's because of 2 good years, consecutive years of monsoon, record Kharif and Rabi. This year also the monsoon prediction is good. We have seen that there's been good rainfall and reservoir levels in our key markets. The rest of the India is also catching up. With a low channel inventory and very high cost of procuring, say for instance, DAP or other NPKs from the global market, the demand for fertilizer is going to be tight. And the supply is also going to be based on the capacities that are available in the plant for supplying to meet with the demand. So it is a question of a demand and supply equation. We think we will try and maximize the production at our plant and ensure that we are able to meet up to the requirements of the farmers in the ongoing Kharif season.
Sure, ma'am, and all the best.
Thank you.
Thank you. The next question is from the line of Trilok from Aditya Birla Sun Life Insurance. Please go ahead.
Yeah, hi, good afternoon, ma'am. Just wanted to understand from the margin, pointers that you highlighted. Is there? Could you just quantify the inventory gains that you had in this quarter? Hello, am I audible?
Name's line got disconnected. We are disconnecting again. Okay.
Sir, our line is showing us connected. It just got disconnected, sir.
Can you try again, please?
Yes, sir. Please stay on line till I reconnect her. Ladies and gentlemen, we have ma'am reconnected to the call. Thank you, and over to you, ma'am.
Yeah, hi. Good afternoon, ma'am. Thanks for the detailed answer on the margins on the previous question. I just wanted to, ask one point. How much could you quantify the inventory gain, we had in this quarter?
What would you like to know? The inventory gain?
That's correct.
We'll have to come back to you on this. I don't have the numbers as such readily available, but that's one portion of the entire gain. We can take this offline.
Sure. I'll connect. Thank you very much. Yeah.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi, sir. So my question is regarding the margin, and overall we have seen the ammonia price almost double from the March to July, and phosphate also recently increased 11%. So how much price increase we have taken, and how much margin is protected in the coming one?
Sorry to interrupt, Mr. Kumar. So there was a slight disturbance coming from your line. I request you to mute your line while the management answers your question.
Well, the ammonia prices as of March was around $375, and it has gone up to $535, $23 during April, May. June obviously was an aberration, as I was mentioning, with both the large suppliers of ammonia going on a ATA, and one of them impacted due to a fire incident at their factory. We have considered pricing not just of ammonia but also of other key raw materials like sulfuric acid, phosphoric acid in our MRP calculations, while we have also taken the benefit of our backward integration and cost efficiencies while arriving at the overall pricing decision.
So, do we have already increased the price, or when we are going to increase?
We have, as I was mentioning, the government had increased the subsidy as on 20th of May from 10,000 rupees to 24,000 rupees on DAP.
Okay.
The frequent MRPs were up to 24,000 rupees per metric ton for DAP. However, given the fact that the subsidy increase was primarily on P and not on N, K and S, and as Coromandel is primarily an NPK player, we have taken necessary pricing actions on some of our NPK grades. As I was mentioning earlier, this is taking into account the raw material price increases, the subsidy increase that has come in, some of our cost efficiencies, including capacity utilization and backward integration. So this has already taken place.
So we are going to maintain the margin level what we have shown in the previous year.
So our intent is to maintain our margin level. We have indicated that around 4,000 rupee to a metric ton is what we are looking into, 4,000 to 4,250. So we think overall for the year we should be around those levels, and we'll have to look into the overall year. And as we go along, it is also equally important to see how the raw material prices are going to be, availability. All these factors are there, but we do believe that 4,000 to 4,250 rupees per metric ton is doable.
So my last question is regarding overall the utilization level and overall the capex plan we have this year and overall long-term strategy for the backward integration of cost.
Yeah, the capex plan is intact. We have indicated this in our earlier calls as well. Currently, the evaporator, which is the 10th evaporator, is coming up in Vizag, which will help us to concentrate the acids and send strong acid into Kakinada for their operations. Similarly, a liquid fertilizer plant is coming up. We are also evaluating other opportunities for backward integration, and this is obviously a very long-term plan, and there is discussion that has started in this front.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi, good afternoon, and congratulations for a good set of numbers. My first question on the crop protection side. So we saw a very strong, revenue ramp up on that side. Just wanted your thoughts, what has been driving this growth? Coming from, where I'm coming from is last 2-3 years we have been seeing steady product launches. And is this the benefit of that, or this is more distribution-led expansion, given digital marketing would have opened the doors for other states, other geographies, as well, both in India as well as international market?
Sure. Thanks, Ankur, for your compliment. As far as the CPC is concerned, there are 3 factors that actually has helped us during the quarter. The first and foremost is the capacity utilization in all our plants. As last year, COVID struck us, we had certain restrictions posed by the government in terms of operating the facilities multi-shifts. So the capacity utilization in our CPC plants is about 45% compared to 79% currently. The higher production this year has also helped in better liquidation and shipment of our products. That's number one. Second, the export markets have been good. We have seen a good growth happening in exports as well as to our B2B customers in the country. The third factor is traction on new product introductions. Over the last couple of years, we've been looking into introducing new generation molecules, and happy to note that this year there were 6 products that have been introduced by the company. One of them is a 9(3) registration. A couple of them are co-marketed products, and out of the 6 products, 3 of them are combination molecules. So this is also bringing in traction in terms of sales. However, the new products were introduced only in mid of June, and we should see the momentum picking up as we go along into the season during Kharif and Rabi.
Sure, ma'am. That's helpful. From a overall balance sheet perspective, now there are significant cash flows that we are generating, given the quicker payment of subsidy as well as the faster ramp up as well. Any expansion plans there? You did mention a couple of capex plans, more on debottlenecking and sort of backward integration on fertilizer. But any significant organic or inorganic opportunities you are evaluating on the overall business growth front?
Well, we do have our plans for capital expenditure both in fertilizer as well as CPC. Fertilizer on the complex, primarily debottlenecking, some amount of backward integration, augmenting capacities of our PA tanks, SA tanks, putting up a liquid fertilizer plant. These are all in progress, and we are also evaluating further backward integration opportunities. On the single superphosphate, interestingly, a couple of plants we are moving from powder into granulated products because that seems to be the future, and there is good success in the granulated plants. So this also calls for a good amount of investment. The third one on the crop protection front, we are looking into this year primarily lot in terms of strengthening the structural stability, enhancing the capacity primarily of some of our key products. The third one is also looking into a multi-purpose plant. We are also evaluating for purchase of land for further expansion, both in terms of technical as well as formulation. So these are broadly the plans that we have. Already for our bio plant at Kadlur, we have invested, and it's a very short 6-month type of a capex program, which has actually helped in increasing the bio extraction capacity by 50%. And we intend to look into this more carefully because the demand for bio products is quite high, both domestically and in the international markets. Apart from all our internal organic growth opportunities, we are also open to looking at inorganic opportunities. As mentioned in the past, synergistic to our business, complements our business model. So these two are important. So that's something that we are open about. We are also looking into some sort of investment in the agri startup, though that could be a small beginning. We think it's a very interesting space and a focus area for future. So these are some of the broad areas we are looking into deployment of our capital, trying to get the maximum benefit for all our stakeholders.
Great, ma'am. Just one clarification. Sameer did mention, the evaporator to convert the low acid into high to be operational. So will this be operational in Q2 and we'll avail the full benefits starting this quarter, Q2FY22, or it will be slightly later?
Yeah, it will be in Q2 of FY22. It may take a month or so for stabilization. But what does this evaporator actually do? It actually helps in converting the weak acid into a strong acid. Thereby, when we transfer it from Vizag to Kakinada, it becomes more efficient both from a supply chain standpoint and also from a consumption standpoint. While we put the phosphate plant, now with the plants operating at full capacity or even in some days slightly higher than the rated capacity, we feel that there is a very good opportunity for us to transport this acid for our operations in Kakinada, thereby reducing the dependency on imports. A conversion into a strong acid will actually help, as I was mentioning, on the supply chain front and also consuming this for products which will require strong acid. So that's the main benefit of a Kent evaporator.
Yeah, sure, ma'am. Appreciate your reply. Thank you and all the best. Bye.
Thank you very much.
Thank you. The next question is from the line of Abhijit Akella from IIFL Securities. Please go ahead.
Yeah, good afternoon, ma'am. Thanks for taking my question. First one, just on the crop protection business, wondering if it's possible to give us some granularity in terms of, the export growth versus domestic growth this quarter, and then also volume versus price, if it's possible to share some, broad pointers around that.
Yeah. Abhijit, the export growth primarily in Mancozeb was around 60 odd percentage, both in Americas and the rest of the world. Okay. On the domestic front, the growth has been primarily on the B2B segment, where we have seen a very good traction. Again on Mancozeb as well as Acephate as one of our products. Here again the growth has been in the range of 50% plus for Mancozeb. We also found that there is a pricing differential between different markets in the exports as well as in India. And given that we have opportunities to maximize our sales between the three markets, which is America, rest of the world and India, the teams have done a good job in terms of allocating the products into the right market, thereby ensuring that we are able to hold on to margins. Like fertilizer, we've also seen a very high or a sharp price increase in the raw materials in crop protection segment as well, especially for Mancozeb, two key raw materials, EDA and CS2 have seen a high price increase during the last quarter. This has not been the case in the last couple of years. There has been some pricing actions that have been taken and allocation to the right markets. This has sort of helped us to hold on to the margin.
So, ma'am, on the pricing front, is it fair to assume that, maybe out of this 50% revenue growth, maybe 15-20 points might have come from pricing and the rest from volumes? Or
no, I would say that a substantial portion of this would be volume driven. Because last year we did not have our plants in Gujarat operating at full capacity. Therefore, we were constrained in terms of product availability for shipping to the export as well as the domestic markets. This year it is a good relief. Having said that, there has been some amount of pricing that has happened. I would say it has all happened towards the end of the quarter, say for instance from June onwards. So that's not a substantial portion of the variance.
Got it. And just one last thing. On the fertilizer pricing front now, the 19th May decision by the government, did that already contemplate this kind of further increase in phosphoric acid and ammonia prices, or does the industry need to take corrective actions? And if so, what's the timeline one should expect? Should one expect that for 2Q, the Kharif season, the industry basically holds onto whatever prices there are, and then corrections are taken ahead of Rabi itself?
So, it's again a good question. See, as far as phosphoric acid is concerned, obviously currently there is a good demand for the end product of phosphoric acid across the world, But we do expect certain amount of softening happen. We have heard about Brazil. You would have also heard about it with the winter crop actually may be less. And there is also the China factor which plays in terms of what they are going to import out. But our strategy, like Jayashree has been said, is simple, is to maximize, our own this thing, and therefore the backward integration which we have done for the plants, and now we also getting the acid across to our Kakinada plant. And that is something which is doing very well, and the TAP 2 has stabilized. We can use different type of acid. We can also source different type of rocks and do the conversion. So that's where it is. So currently, obviously the government is a bit concerned on the phosphoric acid. They have, I believe at their level, they've taken it up at various ministries level with the various governments who are supplying raw material to us. One of the things which we have said as part of Atmanirbhar Bharat is to look at the imported duties which are there, custom duties which are there for manufacturers, and that they are looking at amicably. Long term, we are also looking at PLI for fertilizer. Whole idea is that we make like the government is doing for urea, is to make NPK self-sufficient. So that's something which we have worked to do. And we are also looking at, giving subsidy directly in the hands of the farmers, so that, then he has a choice on what material to buy. And obviously companies like us with innovative products will benefit from that. So I hope that covers your question.
Yes, it does. Thank you so much, Sameerji. Thank you, ma'am. All the best.
Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hi, congratulations, Sameer and Jayashree, on excellent performance in challenging time. Jayashree, one question on this phosphoric acid side. With this converting plant becoming a operational evaporation, so how much capacity utilization one can really look, or how much additional phosphoric acid for the Kakinada will be made from the Vizag plant? That is one. And second, if Sameer, we can talk on mid-term our whole vision for the agro CPC business, including bio side also.
Okay, thanks. So on both your questions, firstly, very good question. So let me talk about each of the businesses. You talked about bio. Bio business, after we've taken over from AID Paris, finding very good attraction. France, our products are doing exceedingly well, both Azar and the other products. In fact, like I was mentioning, that we have actually, in a very short period of time, increased our extraction capacity by 1.5 times. The new plant was inaugurated. It was there in the papers also, which will help us to, export and even supply the domestic market more. So that's one. We are also looking at, which we did last year, was converting not just from seeds, but also getting Azar from the fruit. One challenge which last year we faced, but this year has been better, is in terms of the availability of the neem seeds, because obviously the collection is one of the biggest challenges which we have. And that is something that the team has done well. This time they were not, while COVID was there were not so much of movement restrictions. And therefore we are able to augment this product also. And we continue to develop, when we talk about midterm, we are working with various agriculture universities. Firstly, like Jayashree said, is on application. So, some of our applicators, like the tree injection which we do in Canada, is doing very well in two of our trial markets. And also we are looking at getting into microbial products, which we are working with PMA, and also looking at other even what is called consumer-friendly products on organic. So overall, organic and bio, we continue to see it to be grow, and it's also part of our sustainability agenda. Even as part of our supply chain, like we have mentioned, we have now had 700 acres of neem which is going, so that again traceability can be done. So that's on bio, and we are firstly very happy to see its performance and our acquisition of that. And also we see a lot of long-term prospects in terms of technology. Crop protection, again, like we said, as all the hard work which has been done is paying off. We are now into looking at new generation molecules. We are having tie-ups with with various companies, innovators, and also our R&D teams are generating molecules which we have also launched both for the domestic and the international market. Good thing is we also have our own retail business which can help to promote this product. So again, crop protection again, and now we are looking at even new formulation plants which can help us to supply the market. So our first aim was to ensure that whichever crop we are in, we are able to service the maximum needs of that crop given with the agronomist team. And we do see, and therefore instead of a push, we want to have a pull coming out of it. And that is something which we have seen. One thing is we have to sustain the performance definitely, and even look at certain amount of backward integration like we have done in fertilizer on some critical raw materials. And at the same time also, while Mancozeb continues to be a very good molecule, but we have launched new products also, like we said earlier on our domestic business, 25% are new molecules which we have launched in the last 2 years. So we will continue to build upon the next generation molecule. So that's where we are on crop protection. As far as the phosphate is concerned, again, Kakinada needs, it depends on what sort of grade we manufacture. Is it a high P grade, it's a low P grade, but the needs could be around 5 lakh tons. We are trying to maximize as much production of PAP, and we are very happy for both the PEP and also look at alternate rocks and there. And then it's like Jayashree said, is to see we can transfer both the weak and the concentrated acid to meet at least minimum of 20% of the needs, apart from what we have from our GP. I hope that answers your question.
The last, crop protection, what size would you look to, in 3 to 5 years we are looking for? And with our domestic and export business mix?
We do expect a very high double-digit growth coming from crop protection. Of course, each year can be different, but overall CAGR will be in that. And we do expect, actually the traction will be both in export markets and also in our domestic market. There's a huge scope to grow in both the markets. As our strategy is also, we have put up people now in various markets which are our own people and creating subsidies so that we can also control what is called the end product and the registration. So that is the work which is being done on the export market. So actually the scope is huge, and for company quality players like us and now becoming innovators, we will expect this growth to happen.
Thank you, Samir. And if I have one question, may I take one more question?
If it is short, yes.
Yeah.
Then
so with this Kaleshwaram project and Polavaram, both whenever it works operational full-fledged, how much additional area that we look for our key market?
Right. So let me first start with the Kaleshwaram project, which is in Telangana. And but it's not just Kaleshwaram project, it's also all other good work that Telangana government has done, including desilting of canals and the tanks and other micro irrigation projects which are there, both on the Godavari and Krishna River. So what has happened since the state was formed, the agriculture output has gone up by 2.5 times.
Correct.
Of which regional acreage is only 7%. Right? But it's the availability of water instead of rain-fed, which is something which is there. And now Telangana has become what is called the rice bowl. 5 years ago, we used to talk about it. But then there's also what is called diversification, which is happening into fruits and vegetables and other. Maize was never a crop grown, but it's also coming up. So a lot of diversification has happened. We have oil seeds in the northern districts. We have, chilies which are coming up in various areas. Okay. As far as Polavaram is concerned, which is basically again on Godavari, but it's connecting the Godavari-Krishna River. The current Andhra Chief Minister is almost visiting this project, every 45 days. And the whole idea is that, once the canal is connected and it's operational fully, the issue is of having the secondary canals done for what is called the dry Rayalaseema area. Correct. And there again, like we see for Telangana, we do see an agriculture boom also coming, especially in the Rayalaseema area of Andhra Pradesh, where currently a lot of it is rain-fed. Now, of course, one of the things to be done is to, do more of value-added crops than just, depending on paddy or cotton and other things. But obviously for us, it's, we are in a very fortunate position where both the state governments are very much focused on improving agriculture and the farmers' income.
Okay. Thanks a lot and all the best, Samir and Jayashree.
Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Chitroda from Phillip Capital. Please go ahead.
Yeah, thanks for taking my question and congratulations on good set of numbers. So I think most of my questions are answered, but just to basically ask you slightly on a FY22 outlook as a whole, just want to understand, ma'am, how do you see the volume growth, for the entire FY22, considering we have already started kind of a delayed, rainfall for 3 weeks. So do you think that extended, probably the season of Kharif, as well as if we expect that extended Rabi will also take place. So do you think that volume growth of more than 6-7%, which we achieved last year, can be sustainable for this year as well?
Yeah, the rainfall delay of 1 or 2 weeks shouldn't matter in terms of the volume consumption. In our key markets, we have seen that the rainfall has not been that delayed, while you have seen in the central and northern markets, there has been a bit of a delay of 2 to 3 weeks' time. That should not impact the consumption, right? Because the reservoir levels are also good, the soil moisture conditions are good, the demand from the farmers is good, channel inventory is low. So we do not see any volume contraction or volume not happening during the year.
Hello.
Yeah, Samir was saying that it is more of a supply than a demand issue.
Sure. Sure. And my second question is, again, I think just some clarification in terms of the, the margin side. As I mentioned, a couple of reasons for sustaining a margin for the quarter. But what do you think in terms of if we don't see, subsidy announcement or subsidy support by the government probably take place towards the end of, say, October or November. So by that time, the raw material prices, will keep on basically at this level. So do we expect some MRP increase again for most of our NPK grades?
It's okay, sort of covered it in the question. One is how the raw material prices are going to behave, right? The second one is in terms of the subsidy per se, whether it's going to be only P or it's going to be distributed between P, N, K, and S. And the third element is the ability to pass on the prices in the market. So we will have to work through it as the months go by or the weeks go by. That's the way one needs to look into this.
Question was about, we had some inventory gain for the quarter. So obviously we'll not have that particular gain going forward because we have seen, some subsidy increase and of course that has supported well for the quarter.
Yeah, there has been opening inventory gain, which almost all the companies would have benefited. It often happens in the case where the raw material prices are on the increase, right? So it will continue because we have seen this quarter also there is a price increase that has happened. And as I was mentioning, over the next couple of quarters, the raw material prices should get softened. Phosphoric acid prices, which was about 998 last quarter, is now gone to 1,160, right? So the prices are on a higher trend at this point in time. So one needs to factor those as well.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
So thanks for your time. My first question is on the
Sorry to interrupt, Mr. Kumar, but there is a disturbance coming from your line, sir.
Hello, this is better?
Yes, sir. You may go.
Yeah.
Thank you.
My first question is generally on the volume growth for the company over the next couple of years. What should probably be something that we should work on, and how much as a company we are expecting the fertilizer volume growth to be at? And given the large irrigation projects that is also likely to come over the medium term.
Okay, Vishnu, again a very relevant question. We've sort of talked about it in the past. Currently, the company is looking into some debottlenecking operations both in Kakinada and Vizag to sort of shore up the existing capacity. And as an interim measure, we would also be selectively looking into strategically tying up for imports and sales of finished goods, including NPKs and DAP. So that's the game plan for the, I would say, next 1 to 2 year time frame. As I was mentioning, we're also looking into some sort of the backward integration opportunities and how that scales up, as well as tying up with the global players for continuous supply of raw materials. Depending on that, any further expansion opportunities will also be looked into. And we'll also improve our own capacity utilization, which in the last couple of years, last year was impacted with COVID. This year again, we had wave 2 coming in. However, we were able to continue our production because we also took the ATA mostly in March last year. So it will be to continue driving the capacity utilization, do some debottlenecking, selective import of NPKs and DAP, and at the same time looking forward into strategic tie-ups for imports and sourcing of raw material. I would also ask Sameer to add his inputs here.
Yeah, and the main thing, like they said, it's more the quality than the generic. We want to move away from generic into brand, and we'll continue to improve our share of unique rates, which we supply to the benefit of the farmer, which is more balanced nutrition. Sorry.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Right. Thanks a lot. I think firstly for everyone to attend this call. Again, it's on a virtual mode. Firstly, to wish everyone, I hope everyone has got vaccinated. We definitely should take all the protocols to ensure that the wave 3 doesn't come in. But as far as the good news is agriculture, which we are part of, a lot of investment is happening both from the center and the state government, and the focus is there. The new wave will be to improve the ag tech so that the farmer productivity and sustainability will increase. And we are very happy to be part of the journey. And being our largest agri input, you'll see more and more innovation coming from the company side. Thank you very much.
Thank you. On behalf of Nirmal Bang Equities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thank you.